the producer price index in March, offering investors some relief over inflation fears this morning. Both the monthly and yearly readings coming in below analyst expectations, but the data comes on the heels of a hotter than expected CPI report. Here with more on sticky inflation and how it impacts Americans, we turn to Michelle Meyer, who is the Mastercard Economics Institute Chief U.S. Economist. Great to see you as always, Michelle.
Great to see you.
You see hot prints like yesterday come through. I wonder what goes through your mind and how you kind of correlate that to the data that you see over at Mastercard, which is, I imagine, just, data centers long worth of data here that you have to evaluate.
Well, I think the fact that inflation is proving stickier, particularly in some of the services categories, is somewhat indicative of the fact that the real economy is also looking stronger. We saw job growth accelerate throughout Q1. We've seen consumer spending accelerate as well. When we look at our own spending pulse data, we are seeing greater spending into March. So yes, I think there's still a narrative out there around a disinflation, particularly for a lot of goods, particularly reversing the inflation that was driven by the supply side. But when you think about the demand-led inflation, there's still some pressure there.
Michelle, is that across the board, or what are you seeing from higher income earners versus lower income earners, and maybe the more pressure that lower income earners are under at this point in the cycle, and the fact that inflationary pressures continue to be much higher than many had forecasted at this point?
Well, look, always these aggregate numbers are disguising what's happening, in terms of the micro data. So there's lots of different narratives in there. But I would say when you look at the labor market, which is probably one of the best ways to understand these different dynamics by sector, by income group, et cetera, you are seeing wage growth pretty consistent across different sectors, across different income cohorts. When you look particularly at the Atlanta Fed measure that has that really nice breakdown. And job creation has been pretty broad-based. Construction, manufacturing, goods sector is now seeing stronger job growth as well. It's not just the services sector. So to me, of course, there's different dynamics. It's not a uniform economy when it comes to spending, when it comes to inflation, when it comes to growth. But there's nice breadth in terms of what we're seeing in terms of the expansion right now.
Goods versus services, where are you seeing the highest level of spend to continue to remain resilient right now over at Mastercard?
Well, the story around consumers loving experiences, I don't think that's gone away. And we're really, really keen at the Mastercard Economics Institute to explore that in detail, given the high frequency nature of our insights and our data. So we just yesterday published a blog looking at the Masters, which is going on right now, the golf tournament, to see how the local economy in Augusta is being supported by people going out and spending in restaurants and at hotels, small businesses seeing really important lift, international, folks coming in, tourism, bringing about this big burst of activity. So it shows you that consumers are really, looking for those moments in time to spend. And when they find it, they have the ability to really participate. And I think that's a function of the purchasing power that's still out there on aggregate.
Yeah, I just got back from Augusta a couple days ago, Michelle, and they ran me for a couple pennies for sure. So I can attest to everything that you just said here. I wonder, within the experience economy and where we're also seeing more people tap into online experiences versus going there, is there any moderation that we are seeing in the number of people that are saying, I will travel to go to that event, I will travel to go to that experience, versus saying, if I can experience it via streaming and perhaps just have my fan experience another way that has more digital and more data that's also intertwined into it, that they're making a decision one way or the other?
I think it's both. I think we have become a more digitized economy in many ways, and the pandemic accelerated that, in the sense of being able to, have these remote interactions. So people do use that, of course, for greater spending power. We have seen, if you look at our spending pulse data, the online spending trends continue to outrun what you're seeing in terms of in-store. But you make a good point, Brad, that the online activity is not just for goods, it also is for part of these experiences. Nonetheless, I think when it comes to, travel trends, you are clearly still seeing a lot of people in action, going, trying to get to those experiences that matter most.